Hi, welcome. It's Mary Ellen McGonigal here, Senior Managing Director of Stocks with your weekly Edge show for February 3rd, 2023. Today, as usual, we are going to take a look at the current markets and see where did we close the week. We are at some critical levels. I am recording this about 30 minutes before the close, so please keep that in mind. But also from there, we will take a look at some of those headline news that drove price action last week. All of this, of course, with an eye toward helping you prepare for next week and beyond. And as always, capitalizing on where the strength currently is taking shape in the markets. And then last up, viewer question of the week, and that is all about earnings. I will share with you a particular area that has been vibrant certainly since the beginning of last month and remains so, and we'll share with you some stocks that look really compelling in that group after reporting earnings last week. So let's take a look at some of that news from last week that pushed the markets around. First up, the Federal Reserve on Wednesday announced a rate increase of 0.25%. That was anticipated. And they also signaled ongoing increases in those rates this year as well. Big news there, however, was Fed Chair Powell's acknowledgement that we are seeing the beginning stages of lowered inflation. And that was certainly huge news. Very much gave the markets a boost. We will get into that as we move forward. And then also earlier in the week, the U.S. employment cost index slowed. And this is certainly a metric that the Federal Reserve pays very close attention to relative to its impact on inflation. So that was a positive. And unfortunately, however, January employment numbers showed their largest gain in 6 months, and that occurred today on Friday. Certainly cast a very big cloud on and over the markets. There's another impact as well relative to those earnings that we'll get into, and that is the fact that on Thursday after the close, Apple, Alphabet, and Amazon reported their earnings, and the news was not all good. Very mixed results. Meta Platforms was a big mover of the markets. They reported earlier in the week. Super big surprise, not only with their earnings and their outlook, but also with a share repurchase program that really got investors excited about the ongoing prospects for Meta, and that did drive that stock quite a bit higher. Next week, pretty quiet on that economic calendar front. So when that occurs, you will see more impact among companies that report earnings. And we do have over 400 companies that are due to report, not companies that are quite as impactful as the mega cap FANG stocks, but certainly impactful nonetheless. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. Again, we do have about 30 more minutes left before the markets close, but I can certainly point out some dynamics that are shaping up as we go into the close for this week. First up is the fact that the S&P 500 is remaining above that 4,100 level. This is a very critical level of potential upside resistance before Wednesday's break above there. And at this point in time, we will want to see the S&P hold support above 4,100. At this time, we are at 4,130, so we are poised to remain above that critical level. And also the outside momentum indicators here, RSI in positive territory, trending upward, good news there. And likewise with the faster moving stochastics, another momentum indicator in positive territory as well. So we do have that positive momentum. We are on the lookout for the S&P to hold at that critical 4,100 level. And we had nice high volume characteristics for this week's rally before we had a bit of a pullback today. So from here, let's go ahead and take a look behind and beneath the markets. You want to have a really good sense of what drove price action, not just last week, but overall. So here is a 2-month daily price chart view of the 11 sectors within the S&P 500. I've gone ahead and added a relative strength indicator. I'm going to sort these in descending order, and we want to see, now this is not based on 1 week's price performance, rather it is more of a gradual move, but up here in the forefront are your stronger sectors, and then down here are the weaker areas currently in the markets. And if you watch this show weekly, you'll note that these sectors and their rotation do occur rather slowly. You can really notice when upper performing groups tend to then move down to the weaker areas, and then likewise the weaker areas coming to the forefront. And that's exactly what we have seen, certainly since the beginning of this year. Growth stocks very much in the forefront here. XLC, communication services, we can see technology and discretionary, all high growth areas up here in the forefront. And then as we move forward, there is rotation taking place, and I will share with you why, but we can see REIT stocks on the move here with a break back above this 200-day simple moving average. And quite simply, lower interest rates are good for this group because it allows these REITs to use borrowed funding to increase their buildings and their portfolios. So from here, some other rotation taking shape, and it's not all positive. Down here in this lower quartile are the more defensive staples, healthcare, and utilities. That's been the case also since the beginning of this year. But let's take a look at energy, and it did break below this key 50-day simple moving average. This is XLE, and your momentum is now in negative territory. We'll look at some of the movement and why that area pulled back last week. So from here, I will take us to some ETFs that I find super powerful as a way to stay on top of price movement, strength relative to weakness. So again, that relative strength indicator, a 2-month daily price chart view, and a couple of characteristics that are taking place here. First up, KRE. Now, this is the regional banking ETF, and it has experienced a very powerful move higher this week. We can see the momentum shifting into high gear, trending upward, and this is another side bar to that lowered interest rate environment, which is anticipated to increase lending activity, which is where many of these regional banks gain profit margins. From here, up here in the forefront, semiconductor stocks continue to fare well, up 4.7%. We can see this is a move my MEM Edge report subscribers will know on January 9th. I highlighted this downtrend reversal, and we have several stocks that are on the suggested holdings list that have been participating here. We can see the outside momentum still up above 50 in positive territory. Nice high volume here. This is also the area that I will get into with that viewer question of the week. Several semiconductor companies did report earnings this week. Next up here, software stocks. IGV is the ticker symbol. Another outperformer, broke back above this 200-day simple moving average. Today's pullback is not entirely concerning given the sharp advance we have seen since the beginning of the year. And again, another area that I have been on top of so that investors that our subscribers can take advantage of that move there. So let's take a look as we move forward, because as mentioned, you do want to be aware of some of these weaker areas. First up here is that yield on the 10-year. Now it is picking up quite a bit today. We're now at 3.5%. But if we take a look at since the beginning of the year, January into today, we've seen a general decline in yields on that 10-year, and that's been very constructive for high growth. So we will keep a very close eye on this in today's move higher on that yield and see if it does impact those higher growth areas that fare better in a lowering interest rate environment. Also talked about energy stocks down quite a bit, over 5% this week. And here we are with the view of Brent crude oil. You can see the decline that has shaped up here. A lot of questions surrounding China's potential need for oil in their reopening. and then also Russia with having an oversupply, and elsewhere also impacting negatively the crude pricing oil. Also, big drop today in gold. You can see that the RSI has turned negative on this daily with the MACD crossover. And this, let's see if we can get back and share with you. Yep. Let's take a look at that US dollar. It is now potentially trending higher, uptick about 1% today, but pretty heavy volume there. A rising dollar is negative for commodities such as oil and gold. So that is an overview of the broader markets. From here, let's go ahead and take a look at exactly what took shape last week in the markets. This is a service, FinViz, that you can access quite easily. And what we are looking at here is a view of the activity in the broader markets, or certainly in the S&P 500 last week. These larger squares are stocks that comprise a larger percent of the S&P 500, so it will be those mega cap FANG stocks. But then the color of that square tells a lot. The brighter the green, the higher that stock performed, and then the brighter red, the lower those stocks did go down for the week. So what I did want to share with you with this view is the fact that those mega cap FANG stocks were big drivers of price action this week. We can see Apple on the move higher, Alphabet, and Tesla, and of course Meta. Now Meta is not quite as big, but it was a big impact on the markets. It's closing the week up over 23%, and again that did give the markets quite a big boost this week. And then of course on that negative side, we can see those oil and gas stocks really getting hit last week, and then other areas that are on the move higher. And we can see that transportation stocks, and this is rails, an area that will periodically really pick up, but it is all about earnings and their outlook, and certainly of note. So from here, I will take us over to a view of those mega cap FANG stocks to really display those names that are exhibiting stronger price action as we move into February and beyond. So up here we can see I talked about Meta and this extensive gap up on very heavy volume. Really what's encouraging about this stock is the fact that it's holding in. It's down less than 1%. And in essence here, we can see that the stock is potentially poised to trade higher. I'm going to pull up a 1 hour price chart, kind of really drill down here and share with you what's taking place. Here we are with that gap up yesterday on big volume, and we can see that the stock subsequently entered into an overbought position above 70. But again, we are holding in well. This MACD crossover is simply indicating that this powerful uptrend may very well trend sideways. So looking quite strong there. From here, we can take a look at Apple, and that particular company did report yesterday as well. And we are seeing a nice continuation rally. The stock initially pulled back out on the open, but buyers are coming in, which in turn is occurring on big volume, and we anticipate further upside potential with Apple. Tesla has been on the move here. Gap up after Elon Musk's comments after reporting earnings, and we can see that the stock is potentially stalling here, but that was a significant move that we saw subsequent to earnings. Amazon, one of the weaker names today, and this company did report disappointing earnings and also guide it lower. We can see this pullback that's taking place. The move above this 200-day simple moving average is pulling back. We will want to see that RSI remain up above 50, but really we need only go back to this September period for precedence, actually, in that mid-August into September, where the stock found resistance at that 200-day simple moving average. That negative MACD crossover was your first signal that the uptrend had ended, so keep your eye on that as a signal of further potential deterioration. From here, I did want to share with you a view, and I'm not sure if I did earlier, but this is the semiconductor ETF, SOXX. I talked about, yes, I did, the fact that it's been in a nice uptrend here, and a lot of that having to do with much better than expected earnings from a number of underlying stocks. So today I did want to share with you a couple of companies that did report earnings this week. And of course, that is, from my work, the primary driver of a stock's upward price movement. First up, let's take a look at Cirrus Logic, SRUS, and we can see it's had this beautiful big move here, again coinciding with that downtrend reversal here on January 9th. The bigger point here is the stock is in a very confirmed uptrend. It is a small cap stock within the semiconductor space, but it's exemplary of some of the price movement that we are seeing, particularly among these smaller names. A larger cap semiconductor stock that is looking interesting here, and they did report earnings, is Microchip, MCHP, and I will take a minute and mark this up. It's not as extended as Cirrus. What I also wanted to point out is the fact that subsequent to the release of their earnings, MCHP moved into a nice base breakout on very heavy volume, and this is very constructive. Oftentimes that will push the stock into a nice uptrend. From here, I'm going to go ahead and add a 5-day simple moving average as an area where I would look for a pullback to as a possible entry point. One other stock that we can name that I can point out reported earnings quite a bit larger, and this is Qualcomm, QCOM. And you can see that the stock had been in a very nice uptrend. It did pull back, but the good news is today on that pullback, buyers are coming in, and I'm going to go ahead and pull up that intraday to really refine and share with you what is taking shape here. This is a 15-minute price chart, and here we are with that pullback on the open in response to the earnings. Buyers did come in. However, we do not appear to be closing into the end of today with strength. I will need to see that RSI get back up above 50, and I will need to see a MACD black line up through the red crossover similar to earlier this week to signal that this downtrend in this 15-minute chart has reversed. But certainly there are other names in the semiconductor space that are experiencing more vibrancy. I'm going to leave it there. Everyone have a fantastic weekend. If you haven't already, please use that link below. You can trial my twice-weekly MEM Edge report for 4 weeks for a very nominal fee. I hope you'll take advantage of that. See you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.